Good evening, guys. It is February 10th, 2016, and in tonight's webinar, I am going to review some trades that I made in the last week. We'll have a little film session here, just like athletes watch game film to get better and prepare for their opponent. I like turning to our trade film to kind of review and get better and prepare for our opponent, which in this case is the market, or ourselves in reality. But anyways, so we're just going to dive into it. So the first trade you're going to see is from last week, February 3rd, and it is a trade I made just right after the opening bell on Tesla. I want to set this up. So, as you can see on this day, Tesla is right around flat, and it is 9:29 and 50. There's like 10 seconds before the market opens, and there's something that happens just ahead of the open. You'll see it like in the next second or so. We get a downtick down towards 83, and it kind of whacks out 83s right away. I just want to replay that just for 1 second here, because it's like 2 seconds, so 10 seconds before the market opens, the asks are in the 84s, but then like 3 seconds before the market opens, the ask comes back into the 83, and then as soon as the market opens, we get asks right back at 83. And this is very important because it really kind of dictated why I made the trade that I did, which is going to be a short trade on Tesla. So again, I rewound to 30 seconds before the market opens. Notice our asks are in the 84s. And in these next following seconds, you will see the asks downtick and come under 84. And then, like I said, once the market actually opens, you're going to get asks down at 83 right away. And that's what starts setting up the short trade that I make on Tesla. So there's the ask that comes below comes below 84, and then right away, ask stacking down at 83.50 and ask stacking down at 83. So when I'm seeing this right out of the gate on Tesla, failure to hold a gap, immediate extension below the opening price, stock goes into the red right away. That is bearish, and it is reason to consider being aggressive on Tesla. So that's my mindset here out of the open, and over the next 60 seconds you're going to see me start to key in on these 180 puts, which are at this moment 305 by 345, but they start to move a little bit. And again, I'm bearish here because of the way it came down right away at the open, and now it's failing to recover. We got those asks below 84, they came into the 83s, then they came into the 82s. This right here, we have a bounce attempt by the bids. The bid comes up to 82.70, immediately gets whacked out. Look at those downticks back down to 82.38. Pressure right back on top of the bids again. I want to show that again. So you're going to see the bids uptick. Here's a stack, 82.50. But pay attention right here. Let me pause it just a second. So right here we've got some stacking. Look at all these bid lineups. 82.48, 49.50, 51, 53, 56, all the way on up to 82.60, 82.71. We've got all these bids, and seemingly not a ton of asks below 83. But what you notice is that the bids get wiped out, and as soon as it comes below 82.50, the next bid isn't until 82.17. So I'll click play again, and it's these little split-second drops that you just saw that really kind of get me leaning towards aggressive trades. Because keep in mind, we're only a minute into the day. Now we have the spread opened up, 45 by 72. Who tightens up the spread? Do the bids come up, or do the asks come down? Look at that, the ask comes down. So continuing to see bearish evidence in the price action. We're right at the low. We're not seeing any bounce attempt. You can see now I start to get an order ready on this 180 put, 320 by 340. I've got a limit price ready to go at 330, but they start to move, so I place my bid at 330 after it breaks to a new low, and it's really starting to flush, so I decide to chase here. I get more aggressive. Usually I don't do this, but I've seen very aggressive bearish price action, so I'm willing to, kind of chase in here. I raise a bid to 375. Now I'm in at 375. 350 by 390. I bought one at 375. You can see the position is highlighted here. And I'll rewind about 30 seconds. Because again, I usually don't chase. And I didn't want to chase at first. My first instinct was to place a bid at 330 and try and get filled. But when you whack out these 82s, which you just did, I paused it right here. So here's my bid at $3.30. I placed my bid because I've whacked out 82s. Now I'm looking for a test on 180. Coming into the day, 182 had been a year-to-date low in Tesla. So my thinking was if it gets below 182, it's going to go test 180 to 175. But again, first instinct is to place a bid at $3.30. So that's what I do. But what causes me to chase is the continued aggressiveness of the downticks by the asks. Look at this lineup at 82.17. That is a perfect example of the term ask stacking that you always hear me talking about. Oh, we're getting ask stacking, downticks, nice stacks, etc., etc. This is what I'm talking about. So when we get these stacks, I know that there's a lot of sellers in here, and when they downtick aggressively into the 81s like they do, that's then what gives me reason to chase. That right there, 81.70, 81.45. Now I raise my bid to 375 as soon as I see that, and I'm willing to make that chase trade. And now the setup is just kind of versus yesterday's close of 182.78. One of you asked me, what is the significance of daily closing levels? Well, when we commit into the red on a stock like Tesla has done in this case, now we can use that previous day's close as a reference point that we'd like to stay below in order to keep the short trade intact. So I'm in this trade at $3.75. One thing I don't necessarily like about this is I immediately go to place a sell order at $4.80, just about or so. But I haven't prepared an expectation for a flush below 180. It's going my way quickly, which is great, but I'm kind of just prepared to take profits for the simple reason that I have profits. And that's fine. It's a good trade, 40% pretty instantly. You can see I'm selling at $4.85 right here. I'm out at 485. Not going to get too upset. In at 375, out at 485 in a matter of a minute and a half. But why did I exit? Looking back, if I'm being honest, I exited because I can. I exited because I had profits, and I got excited. Made a quick 40% gain instantly. When in reality, 178 is the 52-week low. We had an awesome flush below 180 directly to 178, and now we're printing 177s. I knew Tesla, at least, I should have known that Tesla, if it got below 178, was going to see a pretty decent flush. And there's a saying people like to say is, nobody goes broke taking a profit. And while that is true, taking profits too early and leaving gains on the table can come back to haunt you in future trades. Because if you take a 40% gain when it could have been an easy 100% gain, now you've missed out on those excess profits, which you might need if you hit a rough patch in your trading. So while nobody goes broke taking a profit, the failure to maximize profits could hurt you over the long term when it comes to your losing trades. So the bone to pick that I had with myself off of this is I sold for no other reason that I had profits to take, and I didn't sell for a technical reason. we're going to keep watching here, and you're going to see Tesla just getting hammered. I mean, it's staying below 178. All of that price action that we saw show up right at the open has maintained itself. And, you know, based on the price action, there really wasn't a technical reason to exit this trade. I would say, you know, 175 is probably the next psychological level that can get tested as long as we're staying below 178. I switch over to Amazon, just going to look at it, but we're going to go back to Tesla. And, you know, you look at those puts now, they're up to $6. Now we're testing 177. And these puts up to $6.20. They're about to hit $6.50. So long story short, you know, left some on the table there. Good trade, good identification of very bearish price action right at the open. And, you know, I like my recognition of that, my identification, whatever you want to call it. That's good. Give myself a little pat on the back for that. But no target. You know, what was my target? What was the reason for exiting? I made a quick 40%, but it could have been a quick 75%, and I need to do a better job of maximizing that when I have an opportunity, because, you know, quite frankly, I haven't traded well this week, and, you know, had I done a better job maximizing gains last week, I wouldn't be as annoyed with myself this week. As it is, some of my losses this week are eating into last week's gains, you know, which hurts my margins. So we need to maximize our profits. We need to think about ourselves like a company. Companies want to expand their profit margins. The higher the profit margin, the more they're making per sale. Our trades need to be the same way. The higher profit margin we can have, the more we're making per trade, the better off we'll be over the long term. All right, next trade we're going to look at is from the same day. It was just a little bit later on this day, and it was on SPY. Let's try and find it here. All right, so in this instance, I'm going to set this up. I'm trading the SPY, and I'm using ES to trade SPY. I like following the ES, which is the S&P 500 futures contract, when I trade SPY personally. I don't like following SPY. Don't ask why, it's just personal preference. But so what I saw here is a huge flush from 1910 down to 1870, and then we finally got a bounce, and I was just looking to short this bounce when things seem to be stalling out around this 1880 range. I'm going to use the SPY 190 strike puts, and I like this trade. Oh, actually I think it was 1885. Yes, it was 1885. I was waiting for 1885. Was kind of the midpoint of this drop that it had made between 10 and about 10:30ish or so. So what I like about this is I was really patient in waiting for my entry on the 190 puts. This is a longer trade. It took about 12 minutes or so, but I'll let it run here and just kind of talk through it. One thing I notice about this that I like right out of the gate is on the 190 put, I've got a limit price set at 227, and the current price is 240 by 250. By placing it at 227, I've kind of trained myself to wait for my price. which I always think we trade better when we're very stubborn about where we try to get in, and we're very picky. It's like when you go to the bar, you're hitting on a chick. For all you college kids listening to this, look, don't talk to the first girl that's willing to talk to you. She's not a good girl. She's just trying to get it in. You need to talk to the chick that is, more selective and more keeping to herself and is really going to have some intellect. Unless, of course, you're a meathead, then you can go talk to that first chick. But no, in all seriousness, you should be picky when it comes to your women. Because if a girl's willing to talk to any guy, then, that tells you something about her, right? So we want to think about our trades the same way. We can take, hundreds of trades a day if we want, but we need to be selective and try and get the best ones. So SPY's popping up here. I take a starter on this 190 put at $2.30 as it pops up to that 1885 range, and I love that I'm shorting this pop because this is a pretty good pop right here. And in 2013, 2014, you would have never shorted a pop like this. But you know what? The market's different this year. This year you have to short pops like this because shorting the rip is, the only thing that's working. It used to be you didn't want to short the rip because it just kept on ripping and you got your head ripped off. But in this market, you really want to short into strength. That's what's working the best so far in 2016. So when we get this big pop higher here, that's when I take my first contract. I'm going to try and get another one, I believe. Maybe I only end up with one. Yeah, I think I only end up with one actually because I placed another bid at $2.10 that never ends up filling. But anyways, again, I like that I waited for it to come up towards 1885 and started shorting into that and was prepared to short more off of that. And what I also like is that rejection right there. You got up to 1885 and right away you come back 3 points on the ES futures. Having a hard time coming back up towards 1885, which is a good sign for the short. Tries to come up a little bit through some 1882s. So this is where I watch to see, all right, is it going to come above 1885? But again, back down, right down to 82. So still falling short of that further bounce. And now one of the things I don't like when I'm watching this on film is I should be pressing into this position, meaning I should be adding to this position. I've got one contract of the 190 puts at a $2.30 average. That's only 230 bucks. This is something where I should end up with 2 to 3 contracts to get in line with my 1 to 2% portfolio exposure. On this trade right now, there's about 0.7% exposure. So, when I saw that stall out, need to have the confidence to add winners because, again, we need to think about our profit margins. We want our greatest exposure to our winning trades, and we want our lowest exposure to our losing trades. So when I see a trade starting to turn into a winner, or confirming that it's doing what I want it to be doing, I need to try and size in a little bit. Doesn't have to be anything crazy. You don't need to put in 10% of your account, 15% of your account, but going from 1% exposure to 2% exposure doubles our position size, which doubles our profits. So again, I continue to like the way it's staying down. When it tries to move through the 82s, it's able to come back down. And now, in my eyes, once it gets back below 1880, which is just around level, I want to see a nice reaction lower. And if I see that nice reaction lower, that would be another reason or another sign of evidence to increase my exposure, which, if I remember correctly, I don't end up increasing my exposure. So that was kind of a mistake on this. Similar to Tesla, good entry, but need to do a better job maximizing the trade. Now what I like here is I place my sell order at $2.72, which is going to be in line with a test at 1875 on the ES futures, which is the move that I'm looking for. So now it's started to come down. But again, this is where if I get more than one contract, maybe I sell one at 272, maybe I sell another at a slightly higher price, what have you. Notice how once it lost 1880, it's having a real hard time popping back above it. Once it lost 1880, it's having a real hard time popping back above it. And we're just staying down. Nice fluid downside movement. It's not whipping back up or anything. No random spikes. Just a clean, solid trend continuing to play out, which is nice. One of the reasons I like watching the ES as opposed to SPY is because the ES level 2 just functions a lot more smoothly. You don't have as many market makers on the ES level 2, so you're not really responding to every single uptick or downtick like you are on SPY, where there's a ton of fake bids and stuff being flashed. Not that there aren't fake bids on the ES, I just think it's a smoother level 2 to be able to keep track of. So we're coming down towards 1875. My sell order is in at $2.72. And if I get just a little bit more of a flush below 77 towards that 75, I'll be able to fill that 272. Sell order that I have in here. Little pop for a point, but again back down. Can't even get going towards 1880. Right back down on top of 1876's. Here comes the 1875s. on best ask here at 272. You can see it over here. The order is about to go through. And now I'm out at 272 on that 1875 test. So really like that trade. Again, I like that I was patient. What I didn't show you was the 20 minutes of waiting for the move off the bottom to enter that trade. I like that then I shorted into that big rip, which, like I mentioned, that's the way you need to be playing things here in 2016 until the trend changes. You need to short the rip, and that's what I did there. And like that, I placed my sell order right away in line with my target of an 1875 back test. Only thing I didn't like is I need to scale in and have a little bit more size on the trade once it is clear that it's starting to go my way. Not that it's easy to say, oh yeah, it's for sure working out. You know, I mean, it's a fine line, but need to get better at walking that line. All right, this is going to be from Friday, February 5th. This is going to be on Amazon. Let's let it clean up here a little bit. Sorry, it's loading. Bear with me. Give me one sec. Sometimes my video player gives me these funky little issues here. Come on, baby. Alright, let me try this. Let me try reloading this page. Excuse me during these technical difficulties. Okay, so let's set this up. So this is on Friday. This is right at the open. And first things first, what do we notice? Well, Amazon's gapping down 1.4%. So what do we always say off of gaps in any direction? If it's a gap higher, we give the preliminary edge to the bulls. If it is a gap lower, we give the preliminary edge to the bears. And off of any gap in any direction, when they have that edge, then it becomes a matter of, are they maintaining that edge, and are they showing extension with that edge? In other words, are they turning that edge into a move? So if we gap down and we hold below the opening price, are we then continuing to then make new lows and start a trend? That's what makes for nice moves to the downside. And that's exactly what's going to happen here with Amazon. It gaps down, opens lower, and right away the opening price is $5.29, and immediately we get asks in the 28s, 27s, 26s, as you'll see, and I start to make an aggressive trade. Nothing much more to it than that, so I'll click play and just kind of talk through things here. Check that out, guys. 27s. I mean, that 26s here, it's just getting killed right out of the gate. When you see action like this, put your antennas up and think about being aggressive. Do you guys want to see that again, or you'll just watch it later? But legit, again, that was right at the open. This wasn't fast forwarded or anything. This was at 9:30 a.m. Eastern. You just saw it go 29 to 26s instantly. All right, so when I see that, I need to start thinking aggressively and thinking about shorts. So I pull up the 520 strike puts, 201 by 257, and she's just continuing to drop, comes below 25. Now the one difficult thing with this trade is there's no reference point. You know, on the Tesla trade, my reference point was the previous day's close. I was only $1 away from it. Right here, you're just dropping, and I got to decide, do I want to chase it or not? And it's difficult on Fridays because look at this spread on these 520 puts, 201 by 315. I wish I knew a better way to deal with stuff like this other than to say sometimes you just got to have the confidence and be willing to accept that You're either going to lose 100 or make 100. Because when you get a spread like this, if you can't fill on the bid, which in most cases you can't, that's really what it comes down to. You're going to see me fill a 520 put at $2.60 when the bid is $2. If it had turned around on me, and I sell at $2, instantly I'm down 60 cents, I'm down 30%. In reality, is that a bad trade? I don't necessarily think so. It's just the nature of the beast, trading Amazon on expiration Friday the first 5 minutes of the day. As you'll see though, the trade-off is that if you are correct, you get instant gains. I switched to the 515 puts, but I didn't think I bought 515 puts. I think I buy 520 puts. Let's see if I go back to the 520 puts. Now what I like here on Amazon, again, you dropped huge right away and you're not showing any bounce attempts at all. Just tons of ask stacking in the 25s. No attempts at all to try and go higher. You're going to see a small little spike to 26, and then it immediately comes back down, and that's kind of tipping me off that this thing's staying heavy. What I would have liked is if it bounced up towards kind of 29-ish, 28-ish, $1 below the opening price. That could have given me a better reference point to trade against. As it is, though, it's not doing that, and it's just kind of stalling right here on the 25s. You can see the spread on these 515 puts, 97 cents by 179. Again, it continues to require a more aggressive mindset. I still haven't entered, but I believe within the next minute or so, you're going to see me go back to the 520 puts. Yep, here it is. So I switched back to the 520 puts. Now the spread's a little bit tighter, 224 by 264. I've got an order ready to place at 260. And what I'm waiting for is commitment below 25. So there it comes, starts coming back on top of 25. I end up buying it at 260, 227 by 292. And this is the best part of this trade, is that right away it starts working out for me. What's going to be the worst part about this trade, and what really pissed me off, is there is no sell side execution. There's no target, there's no limit order placed. I mean, it's just completely random here. You can see it's flushing out. I'm getting a move, and you look at my limit order stuff, I'm just not really sure what to do. I'm messing around, all right, putting some prices. Maybe I'll go at 345 is what I'm thinking right here. But when I watch it on film, my target should be 520. But again, just no sell side execution. And now look, do you guys see what I just did right there? It bounced back up towards 24, and the spread opened up, and I get all scared. Check this out. I want to show this. This is some good insight into my thinking, and I know I got scared because of what I do. So I'll show you it again. So I rewound just a few seconds. So I'm in this trade at 260. It flushes out, looking good. 280 by 345. I'm going to tip you off on how I know I got scared. I'm ready to sell at 345, it looks like. Asks are in the 23s, but then look, asks get taken up to 220, back into 524s, and look at what I do. I get my limit price, I put my limit price back down to $2.60, right on top of break even. Because now I'm like, oh no, it's coming back up, Maybe I need to sell break even. And again, I know that was my thinking, because otherwise I'm not adjusting my limit price. I'm just trusting that the stock's going to keep going my way. And as you'll see as it plays out over the next few minutes, that fear of that whippy action ends up costing me dearly here, because I sell way too early is what's going to happen. So again, just need better confidence. Now at this point I put a sell order in at $4.35. You can't see it because I did it pretty quickly. You start to come back down. I'm thinking, okay, it's alright. It's still going to come down, go towards 520. Spread starting to come back in my favor, 250 by 360. Flushing 23s, testing 22s. Really good price action to the downside. Immediate downticks. Ask pressure. Look at those downticks right on top of 23, and you're going to see the asks coming into the 22s instantly. Right here, stack at 23, and within a few seconds, all right, well, I guess they opened it up, then they come right back down here. Oh, there I am getting scared again. Look, trying to sell at 315. What are you doing, Kevin? That's funny. I forgot about that one. But it looks like I got scared again here. Let's rewind and see what the heck my word I don't want to say publicly was doing. I just noticed this on film. I didn't remember this. I knew I got scared the first time. But again, this is an example where that fear of the spread kind of haunts me throughout this trade. So watch this. You see that spread opens up and I place a sell order at 325, but I cancel it, then go to 315. Then I cancel it again and cooler heads prevail, and I think, Kevin, what are you doing? I heard myself on film say, actually, I'll stick with it and see if it comes back below 24. But I just want to look at that one more time. So it started to come down, but when the stock spread opened up, let's see, it's going to make a new low. You're going to see it make a new low into the 22s, and then the asks are going to come up to 24, and the spread's going to be like 23 by 24. And then if you look up here on this option level 2, you'll see then I get all shook out and scared and place a live sell order at $3.25 because I'm, scared. You just got to call it like I see it. Trading like a little LB in this case. See right there, spread opens up 23 by 24, sell order goes in at 325, doesn't get filled, immediately lower to 315. What are you doing, man? This is a case where I'm playing from ahead. I got a great entry. Wish I had an explanation as to why I was so fearful on this. But luckily I canceled it and said, okay, I'll stick with it, see if it comes back into the 23s, and it does come back into the 23s on the ask side. Nice down ticks right there, immediately down into the 22s, so feel good. But once again, no sell order is in place. There's no profit. There's no profit target, that I've kind of set up for myself, and it's just kind of a freestyle, and freestyles usually don't work well, and you're going to see me sell very early because, again, I'm just kind of scared of the spread. 325 by $4. I'm responding to every little tick change, uptick, downtick in the stock. So now I place my sell order at $4.05. So I'm saying, okay, I'll go between the spread. Why I'm selling at 405, I don't know. Then I downtick to 395. Again, I'm just kind of reacting to every little uptick and downtick as opposed to trusting that there's a trend working to the downside, and I end up selling at $3.65. Let's watch me chase that thing down again here. I'll go from 405 down to 395 and end up selling at 365. Look, I'm not going to get that pissed off about selling at 365 from the 260 entry. It's on paper, it's 40% gain in just 5 minutes, so it looks good on paper, but when I watch it on film, this is why I watch film, it's really not that great of a trade. Downtick to 405, downtick to 395, end up downticking all the way to 365. Like I said in the Tesla example, profit margins, profit margins, profit margins. So I end up selling 365, and let's just watch what happens here. Testing 520. really struggling to bounce at all off 520. And this was the low for the week on Amazon, so if you get below it, then I would expect a decent reaction to the downside. And here comes a 520 breakdown. At least it should be coming if I remember right. But again, you look at my 520 puts now, 420 by 485. Instead of letting the stock work for me, I'm kind of working for the stock. I'm not trying to act like it's easy to make 100%, but Fridays are the days that it's very possible. And I had a great entry, so it just kind of bugs me. It's just a matter of confidence, really. Need to get more confidence in the execution and trusting the entry point and letting it play out, because as you can see now, testing 519s and those puts up to $4.90. And by the end of the day, I think Amazon tested like 500 bucks even. It hit like 505 or so. So these puts end up hitting like 15 bucks on the day. So bottom line, left a lot on the table, and just the jitteriness because of that spread. Need to figure out a better way to deal with it. If you're going to trade Amazon, or you get the same thing on Google too on Fridays, if you're going to trade an Amazon or a Google or a price line on a Friday, you just got to accept that is the spread. It is what it is, and you can't overreact to every single tick. Otherwise you end up like me, selling way too early, which again, if we fast forward here, you can see now. So 7 minutes later, look at Amazon now, 514. Look at those puts. They just hit 8 bucks. So my 40% gain doesn't look too hot compared to what it could have been. So positives, great identification right at the open. Good decision to be aggressive. Good entry point. But negative, just way too fearful of the spread. Not enough sell side execution, and that's been the problem for me. That's the area I need to improve. So those were the different trades that I wanted to talk about here. Of them all, I thought the SPY trade was the best trade, which is ironic because that's the trade I made the least amount of money on. I made like a 20% gain on that. Tesla and Amazon were both like 30 and 40% gains. But I felt that Tesla and Amazon were, they were fine trades, but they weren't necessarily good trades when you put them into context of what the stocks did, because I left a lot on the table, which really hurt my profit margin on each of those trades. So hopefully you guys got something out of that. Are there any questions here on the film study?